In this video, I'm going to show you how to track the footprints of institutional traders using one of the most powerful tools in trading, the VWAP. Whether you are a day trader, a swing trader, or an investor, understanding the VWAP can give you a real edge. VWAP stands for Volume Weighted Average Price. It tells you the average price a stock or a security is traded at throughout the day. This is weighted by volume. That means that VWAP isn't just about price. It's about where the most volume or money is flowing in. Here's the secret. Institutional clients, like for example, pension funds and mutual funds, they evaluate execution quality by comparing it to VWAP. Why? Because large orders can move the market if placed aggressively, called slippage. This is why VWAP targeted algorithms, they split the orders into smaller chunks near or at VWAP. This allows those institutions to blend in with the market and minimize any impact. You can think of the VWAP as the gravitational pull where institutions are likely to be getting involved. Like for example, here you can see that this is a live chart on ES, and you can see that since early this morning we've been hovering here around the VWAP. So the VWAP is this yellow line, and you can see that price has been hovering all around the VWAP all morning. So very interesting to see all of the orders being filled at or near VWAP. Let me show you how to add the VWAP in TradingView. So first thing you want to do, you want to open your chart and select whatever trading pair you're trading. So this chart is on ES, and we want to go to indicators. In indicators, you want to select or type in here volume. Okay, so volume weighted average price. So that's going to be the VWAP. Select that and it will plot on your chart. So this line you see here, it's the volume weighted average price. It will auto calculate for you. You don't have to do anything else. And you will notice that on each and every single session, it will reset. So it will always go back to the beginning of the session and start plotting throughout the day. For those of you who are more advanced, you can use an anchored VWAP. And these are great for those events. For example, like an earnings report from Apple or Microsoft or any of the Mac 7, or a FOMC, CPI, a major breakout, a all-time high or an all-time low. So you can use an anchored VWAP to again track the weighted average price for that event. And the way to add that on TradingView, you can head over to your indicators here on the left, so your panel, and then you're going to have the volume-based indicators, and you can click on this and you'll have a selection to choose from. So here, for example, let's say we did have on this low, let's say this was an event, we can then click on there and it will plot the anchored VWAP for this reference. So again, this is great for advanced traders who want to track those nice news releases, events, etc. And then you can use the normal volume weighted average price, the normal VWAP, the session VWAP, for your intraday trades, as well as tracking those nice institutional order flow. Let's go over on how traders use the VWAP practically. So the most common way is by trend buyers. So here you can see that price is above the VWAP, so we're making higher highs and higher lows. So this means that the buyers are in control. Therefore, we have a bullish bias for this session or day, and we want to be a buyer. So we can then use other confluences such as point of controls, previous day's values, moving averages. You can always plot, for example, like a 200s simple moving average or a 50, and then follow that trend as well. Obviously, the moving average will be a little bit more lagging, whereby the VWAP will have that real institution feel and backing behind it. So here we have a more bearish buyers with all the sellers being more dominant. You can see prices making lower lows, lower highs, lower lows, lower highs, and each and every time coming back to VWAP, rejecting. The next day, we see the same thing, making lower lows and lower highs, and just unable to claim that VWAP. So again, here, we don't want to be a long trader. We want to be going with that trend to the downside in this case, because the sellers are dominant. We can see the institutional flow is bearish. So we want to position ourselves to have that bearish bias for the day and going with the dominance, which is to the downside. Let's walk through a quick example of a long trade I took earlier in the week. So I'm going to press play here. This is a recording of a live trade. And you can see that price is above VWAP, or has been above VWAP, and now we're just getting a retest of the VWAP. I think I've got this on ×2, so it should be a little bit quicker for you to see the trade. But the idea here was to obviously buy the VWAP. And you can see here I'm like adjusting my entry again, because I've seen this nice candle breaking the 43s. So for me, that's like a confirmation that the market has looked below, reclaimed that 1 minute high, and the pullback back down to VWAP should be a nice buy trade, or average back in if you like already are 1 or 2 lots in. And you can see at the very high there, we have the series of poor highs, where price makes a high and then it's lower lows, lower highs, but overall the trend is still up. We're above VWAP, so this becomes a nice place with the confluence of the previous day midpoint as well as the current day point of control. So for me, this is a long trade, going with the momentum, going with that institutional trade flow, which is to the buyers upside, bullish bias, and then just trying to get the fill. There you go. So we are now in this trade, risking around $200 and aiming for at least 400, so 1-to-1, and then anything above that is obviously an added bonus. What I like to do in this trades is to simply box in price, which is an effective way of trying to capture those long runs. So you will find that in a minute, I'm going to start moving my stop higher and just trail it. So I'm just allowing price to first give me that sign that it wants to leave this range behind to the upside. And by that, it will have to trade above that 62.50. So until then, it's still, let's see what happens. So there you go. Another run back down to VWAP and held, and price is now pushing back through towards those 50s. So not quite there yet. And we are, there you go. So trading at the 50s now. You're going to find, yeah, there you go. So moving my stop up to that 46, which is the previous second candle 1 minute low. This is the 1 minute chart. And there you can see, so as I plot those levels, so this is the previous day midpoint as well as the close and the RTH mid. So quite a little bit of a confluence there at the VWAP. So it's never just, VWAP alone, but it adds to, where is the institutional traders? Where are they averaging into those trades? Well, they will be at or near VWAP, so we want to be with that flow. And you can see they're up on this trade around $350 to $400 and boxing in as much as I can. So at this point, you don't really want to see a winning trade go into a losing trade. So it's good practice to, trail your stop. So currently stop at 52. And price is trying to get to that 58 high. So again, just adjusting the stop again, up 500. And this is a day scalp trade going with that institutional flow. And you can see as I move my stop higher, I move my stop loss as well. And got stopped out there for around that $500 trade. VWAP is where volume meets price and where institutions quietly play their hand. Use it to sharpen your edge. If this video helped you and you can see the market a little bit differently, please give it a like, subscribe, and drop us a comment down below. I'll be happy to help you further. And remember, always trade with a plan.